Alrighty, guys. How's everybody doing today? I did mute everybody. You can unmute, or if you guys would, preferably if you would use the chat window, that'd be great. So if you guys have any questions, this session, this session's going to be for you guys. So for everybody who's new to Next Gen, or if you've been with Next Gen for a while and you have any questions, great. But I got to let people in here. So really quickly, oh, good God. I wish I could automatically let everybody in. That would be so much easier. I want to see if, bear with me 2 seconds. Okay. All right. Can you guys hear me okay? I just want to make sure. Somebody type in a yes if you can hear me. Anybody? All right. Okay. Whew, always scares me when I don't get that. So, I wanted this session to be very geared towards new users. But if you guys have questions that you need answered, I'm more than happy. I don't have a big agenda here. I wanted to cover a couple things real quick, and I wanted to make new users' lives simple. One of the things that as a new user, they get in and they're like, oh, there's so many lines and there's so much stuff going on. I wanted to be able to give the new traders focus. So we're going to refer to this checklist. I don't know. Hopefully everybody's familiar with this. One of the, really important parts about what I'm going to talk about will be covered in this video, the tops and bottoms video. If you guys haven't watched this video, this is really, really important, and I'm going to show you why it's important. I'm not going to make you watch the video. We're not going to talk about it. What I really want to do is look at a chart. Because I think, when it comes down to it, at the end of the day, you guys, you look at your charts and you have to make an assessment. On the right edge of the chart, you have to say, what's about to happen and what do I need to do now? And I want to keep everybody's focus on trend trading and nothing else but trend trading. Okay. And I just wanted to give you guys maybe some tips and tricks that can make your life easy as you're going forward with Next Gen, and to get you guys to make money as quickly as possible. I'm going to use the NASDAQ in this example. The reason why, once you have the rules down, one of the most important things for us as traders is what? Chart movement. If the charts don't move, kind of like the Dow or the S&P today was kind of slow, there's not a lot of trade setups. So the most important thing is that we get a lot of trade setups and we get a lot of opportunities. And I made some pictures earlier, and these are pictures that I actually made for people in the Discord during the day today. But one of the things that when you guys look at the chart and you guys look at your rules and you guys go through, the very first rule, and I think a lot of people skip this rule, is the market coming from a good top or bottom? And again, there's a video in here and I want you guys to watch that video again, but the importance of having a good top or bottom. And, when I say good top or bottom, what does that mean? When you're in the user guide and you go through termination conditions, specifically, a termination condition by definition is where we stop taking trades against the trend, right? So if it's going down and we hit blue fibs, or it's going up and we hit red fibs, we stop trading. Yellow 1-to-1s, divergence lines on the low or the high. Multiple divergences can cause it. And I don't want to really give a long dissertation on termination conditions, but it's any Fibonacci line that causes or may may cause a reversal in the market. And that's not where you guys are going to make your trades. You guys are going to make trades. I guess my programmer took my login. That's okay. You guys are going to make trades after something happens. So, again, when we look at terminations on the chart, for example, red lines can be termination conditions, right? We can have yellow dots that can be termination conditions. And I want you to think of termination as stop going short or termination as stop going long. We're going to use it in another context, which is termination that caused a reversal. So when we look at it, when you're defining termination conditions, these are the areas that you no longer want to trade into. Does that make sense? Hopefully. We're going to talk about the actual trades. When you get to the rules and you say to yourself, okay, I'm ready to take a trend trade, and you're going through the rules, what I want to do is I'm going to just go through the chart with you guys and just kind of walk through it. I think it's the easiest way to do it. Just because you get to a termination condition doesn't mean that you're going to have a trade after it. Sometimes we do, sometimes we don't. What I want you guys to focus on when you're new is a termination condition, no matter which one it is. So I'm going to draw an arrow here. Hopefully you guys can see that arrow real well. This is magenta 1-to-1s down at the bottom. I drew a box in down here. And I want you to see the difference. We had 1-to-1s over here, but the trigger lines never rolled up, right? We didn't get both trigger lines to roll up. So yeah, it was a good bounce, but that was all it was. Then we have a yellow dots over here, and that's fine, but all the trigger lines didn't roll up, so it's not really a tradable condition. And then we have a divergence low plus more dots over here, and again, this is where finally some type of condition, and the majority of time it's divergence plus. So whenever you have this little negative number down here, these are the areas, what we're looking for, what you're looking for, and what we're talking about when we go in the trading plan is the market coming from a good top or bottom. And this, you can go through the video, but more specifically, I want you to just see it on the chart. I think it's easier. Any divergence plus a line, you can have just lines too, but any major area that causes the triggers to do this, meaning both of them go up. Hang on, I gotta let more people in here. Is everybody okay with this? You guys could type a yes or no, but we're gonna have a termination condition and we're gonna have triggers that cross up, and this is the only time you guys are gonna look for a trade. And if you're on the S&P, it's gonna be boring as hell because you don't get a lot of trades. That's just the nature. Some days you do, some days you don't. If you watch the NASDAQ, you're going to get 40 trades in a day. So again, what we're going to be watching for, and again, what I want to do first is just walk through the chart, if you guys don't mind. And I want to point out the conditions that make a tradable reversal. And we could call it a good top or bottom. But we're looking for some type of Fibonacci horizontal line that goes across the chart. So you don't have to really worry about whether it's a yellow dot or a pink dot or a blue line or a cyan divergence line. It doesn't really matter, okay? Any horizontal Fibonacci plot, especially when it has divergence that causes the triggers to cross over, is going to be a tradable situation. Everybody cool with that? So simple, right? So in this situation, this was the end of yesterday, actually. So look, this was the only Fibonacci line that caused the triggers to look like this, and it made for a trade. So you could buy a pullback on your smaller chart and then get out at resistance. It's not a lot of money. That's 15, 16 points on the NASDAQ, but you do that several times a day and you're good. Now, as we go forward, you're going to see the same thing again. And look, this is going to be a real common theme. You guys have seen this many times, or you will if you haven't. But do you see the little negative number divergence down here at the bottom? Once the trigger lines roll up, we're looking for long trades. That's it. And as the market progresses, you may get one long trade in here, and then you may say to yourself, hey, we hit resistance. I need resistance to break. And of course, if an area breaks, that's as good as a good top or bottom. So, a breakout counts. So if we have breakouts, that's going to be a good thing for us. So anytime we break a fib and the triggers are going up, you're going to keep going. And if you break a fib and the triggers are going up, we're going to keep going. Everybody okay with that? Now, this started from divergence. Hang on, I got to let more people in. All right. So as we go forward, the other condition that I want you guys to really pay attention to is if you have divergence with what we call weak triggers. So, and weak triggers are defined as small triggers inside of the large triggers. Everybody okay with that? So if this weak trigger and it has divergence, meaning a negative number on it, if it causes both of the trigger lines to roll over, you're going to get a trend trade in that situation as well. And that's it. So if you have an area, some type of horizontal Fibonacci support or resistance with divergence that causes a full reversal, you're going to take trades. If you have a breakout, you're going to take trades. And then ultimately, if you have weak triggers with divergence, if all the trigger lines roll over, you're going to get a trade, either the first trade or the second trade until, of course, you hit support. Is everybody okay with this? So, look, I have the chat. If you guys haven't used the chat, you can click the box, pull it up. If you have questions, throw them in. I'm totally fine with questions. I don't have a real big agenda. My agenda is to just show you something simple and easy so you can start making some money as quick as possible. Now, if we have a fib, let me draw a, bear with me here. I'm going to draw a box. So look, I want you to notice we had Fibonacci support. And this is where a lot of our users, new users, get into trouble because they say, oh, look, a blue line held and my triggers are starting to go up. I'm going to try to buy. And this is not, counted as a good bottom because when you make the bottom, your trigger lines are really strong to the downside. Doesn't mean that it can't keep going up later, but since both triggers didn't roll, we're not going to get a trade. Okay? So not every bounce and every tweak and every twist in the market is a trade. One of the other things that we talk about in our termination conditions is divergences and then subsequent lower divergences. And again, this is not only an exit if you were long for some reason, but it can also be the precursor for a breakout. And when you get a breakout of a fib, any type of pullback with strong triggers is going to be another trade for you. So you can have divergence with weak triggers. You can have divergence that causes a breakout, and that's going to cause you to do a trade short. Everybody okay with this trade short idea? And again, I don't want to go too far into the rules. I just want looks. See how the trigger lines are really strong and we have resistance? You're going short. And then obviously you have to pay attention to the one-to-one dots because if we don't keep going past them, it's going to end up being a possible termination condition. And for us, when we have one-to-ones, and I'm not saying that there might not have been a trade that you had to manage out of. We're not going to get that far into it. But I want you to recognize what happens when we get divergence on a low and the triggers roll over. We didn't quite break the fib, but perhaps could have been a long trade there. So look, I want to go forward on the chart. And I just want to draw in the areas that you'll see that end up being trades for you. Is everybody okay with this? So look, in this case, we ended up having Fibonacci resistance, and they overran it. And this happens sometimes where they just overrun it. You might even take a long trade and lose, and then all of a sudden, the trend was going down, and then it goes back down again. Again, this would be considered a break to the upside and then a break to the downside. And anytime you get a break of a fib, either above or below, you're going to end up taking a trade. So you might have gone long here and taken a loser. That's okay. It happens. And then when we break to the downside, you're going to do the same thing in reverse. You're going to find the strong look and you're going to trade to support, and then that's it. And there's a lot of dead time when you're trading the market. So again, remember what we talked about just a minute ago. Weak triggers with divergence could be a potential termination condition for us. And it's not at an area. If it was at a fib, it'd be better, but these are the ones that we still have to watch. Because if we are reversing the market with divergence and weak triggers, we usually are going to go back up to the fibs and the mid bands. So if the triggers are in a situation where you can take one trade to the long side to get up there, you want to take that trade. Is everybody okay with it? Now, the trick is, and I made a bunch of pictures, I was putting these in the room, but for me, divergence with weak triggers is enough of a termination to cause short trades. And then more specifically, if we have divergence from fibs, it's going to cause long trades to happen. And, these are all just pictures from today. We'll go through and look at the charts, but termination with divergence is going to be a really, really, really good one for you. And these are the trades you don't want to skip. So let's just go forward and look at the chart together, and you'll start to see how, weak triggers with divergence will take us back up to resistance. Obviously, resistance holds. And was there a trade to the short side? Who knows? Probably not. Doesn't look like it. But now that we're looking at the bottom right edge of the chart, before we go any further, does everybody see how you can classify this divergence from a fib as a good bottom? Now, it doesn't mean you're going to get a trade. So, Denise, let me see. What do you consider going past the 1-to-1 dots? Yeah, look, I would love to say that our software calls every twist and turn perfectly to the tick, but price can exceed a fib by a little bit as long as both triggers don't exceed the fib. It could reverse. Does that make sense? So what we're looking for whenever we get to a fib, I'll look at it here, for example. So when we get to a fib, price can go a little bit past it, whatever, that's fine. But once both triggers are below the fib, right, meaning physically both the large and the small triggers are below the fib, that's where we can anticipate continuation to the downside. When it's only one of two triggers, here I've got another picture, and I know Mark goes through this in class a lot, but that's a really good question, because you can use this, basically you can use this logic on any fib line, whether it's a 1-to-1 or whether it's a mid band, or here, let me pull up this picture I got here real quick. So this is a good example right here. I'll blow it up so you guys can see it. But we call it a 50-50 look. And as Mark says in the room, it's not the odds of winning a trade. It means that the large triggers are not below some sort of support, like a green midband or a blue fib or whatever. So it means that the smalls are below and the price is below, but the large are above. And, this is where you may get a short trade, but you may have to manage out of it very quickly if there's divergence on the small chart or something like that. And it's okay to take a 50-50 trade. You just have to manage those a little more assertively. once you get both triggers, like this is a good example, once you get both sets of triggers past a blue fib, we're going long here. Now, it didn't go all the way up, but that's okay. Doesn't mean you can't make some money and then manage out of your position. So it's the same thing when you're looking at one-to-ones. I'll find an example. So here's one where, and again, this is one where we probably took another short trade if there was a short trade to be had. This is a really good look for going short, and it's, again, there's no such thing as 100% winners. It's just not going to happen. So there may have been a pullback and a short trade on the small chart that had a higher divergence that you had to manage out of. It's kind of hard to say what happened here. So it doesn't, you don't know for sure. This is where we live on the right edge of the chart. And when it looks like this, let me let more people in here. So when it looks like this, you're going to take a trade. I mean, literally, unless there's some crazy something happening on your small chart with support or something, you're going to take a trade. And sometimes you're going to take a loser, and that's okay. What we want to focus on, and look, if you guys want to play NASDAQ, that's fine. The reason I like the NASDAQ, and it's violent compared to the S&P. So if you're not used to your rules yet and not used to reading the charts real well yet, you may want to refrain from the NASDAQ until such time. But so, look, we were right here. This is the end of the day, so it doesn't really count, but I kind of ran out of time here. But this is the type of look that we're looking for, where we get a support, some type of horizontal Fibonacci line. I don't care what it is. Dots, lines, divergence lines. Everybody okay with that? Doesn't matter. Give me that with divergence, and then when the triggers roll, you're going to take a trade on a pullback on the smaller chart, period. How far will it go? We don't know. Hopefully it goes far enough to make some money and manage your trade, and this one didn't keep going through. So look, that was yesterday, the end of the day. And again, you can see the process, and you can turn around pretty quickly. I mean, in the NASDAQ, it happens very quick. In the S&P, it's very slow. Crude oil, it's kind of a medium speed. So it just kind of depends on, what the market's doing. This is another situation of 50-50. So, and look, you can see it. The large triggers are above. And again, the second half of your question is for clarification. We only look for good tops and bottoms. Yes and no. Again, if you're trading the NASDAQ, I would say yes, 100% for certain. Because the NASDAQ is a little bit, just say yes or no, type in the chat room. Do you guys look at the NASDAQ or not? I'm just curious, yes or no. Some of you who are newer probably no. Some of you who've had software for a while probably yes. That's why you trade? Cool. All right, so, and again, look, some of you do, some of you don't, but the patterns are the same. I could pull up Ethereum crypto right now, and the pattern is the same. You're going to look for the same thing regardless of the chart, regardless of the time frame. It doesn't matter. So you'll notice this is a 50-50. Large triggers are above the blue line, but we have divergence. So without even looking at what's going to happen next, you can already see that the trigger lines have done what they needed to do. And, again, you can overrun, that's fine, but this divergence sets the tone that you're going to take long trades. Everybody okay with that? Again, you don't know where they're going to happen, and you'd never know how far they're going to go. And sometimes they go, and then they don't, and that's okay too. So look, let's go forward. This is overnight. This is like 10 o'clock at night, so it's not great trading time. But again, you can have divergence from a fib, but both triggers don't roll. So it doesn't really matter. It's not a trade. You may stop going short, but you're not necessarily going long because both triggers doesn't roll. Everybody okay with that? And again, I'm not trying to regurgitate the rules, but short version is we're going to be a little more biased to a top or bottom. If you haven't watched this video, I'll put a link into it so you guys can have it, but it should be in your plan. That's the how to define a good top and bottom video. And it also goes into not a good top or bottom. And it doesn't mean that you can't trade if you don't have a good top or bottom. It just means that those are the trades that don't always finish. Sometimes they do, half the time they don't. So you're going to have to manage those trades a little bit more. Like, for example, if you get a higher or lower divergence on a trade that's not from a good top or bottom, you need to get the hell out and quit, because I think that's another thing that new users, if you've got a good top or bottom and really strong triggers, you don't have to worry about managing your trade. You put your trade on, you close your eyes, you grit your teeth, and you pray, and hopefully it keeps going. And usually they do. If you're in a situation where it's not a good top or bottom, you're going to have to manage that trade a little bit more. So again, let's go through and, can I just go forward on the chart and we'll just talk about what we see? Again, look, we have a little divergence here. And, again, the trigger's rolled, so you may have taken a trade to the long side. Again, we're not really having a bottom from any type of area. So these are the types of trades that you might get into, but you might have to manage out of just as quickly. Hopefully that makes sense. When you have a second divergence from the same area, you guys know we call this a pivot stop out. So whenever we have this little blue divergence line, now we have a line and divergence. This one just had divergence with nothing. So it's like, okay, I'll take one if I have to, but I'm going to kind of keep my eye on it. Does that make sense? Now we have a line, a horizontal line on the chart, and that's really, no, absolutely not. No, you want to go long, and that's usually your first profit target. You don't want to wait until anything other than I've got divergence and both of my triggers have rolled, take a trade. Does that make sense? Now, where did it come from? Support or resistance or whatever, that's going to add to it. And if it came from nowhere, it's probably going to go back down again. So, the idea is take more trades. The more trades you take, the more opportunities you have to make money. You just want to have some common sense about which ones am I taking. You don't want to randomly take trades. You want to take trades that have a little bit of, or a lot of odds in our favor. So the difference between, this divergence and this divergence is there's a line involved, a cyan horizontal line. Now, we don't know what's going to happen. I don't know how far it's going to go. I don't know anything about what's about to happen. All I know is that if my triggers roll over, we're going to try to find a trade to the long side. Right? So, if there was a pullback in here, great. If there wasn't, then this was probably the first one. And, again, you'll see this whole thing repeat. So maybe there's a trade, maybe there wasn't, but this is the condition that we're looking for. Before I go further, I want to make sure that you guys are comfortable when we talk about termination conditions. And we're basically talking about any fib horizontal line, blue, red, yellow dots, magenta dots, cyan lines, magenta lines. These are conditions. I mean, a third divergence in the same area is a condition, but the first set is lines. So horizontal line with divergence, find a trade. And then, you kind of see the same thing in reverse here. We had a divergence, but from where? For what reason? There's no reason. And the triggers didn't roll over, so there's not really much to do here. And then, ultimately, we had divergence again, but this time we've got some lines, right? We've got a divergent cyan line. We've got some magenta dots. What do you guys think? Good enough for me? Good enough for you, right? So if both triggers roll over, sell the shit out of it. So tell me, did both triggers roll over? Yes. Did we get a little pullback? Yes. You're going short. Now, there's no fibs involved here, red or blue fibs, but we're just talking about conditions. So if you have horizontal lines on your chart, you have a divergence, and both trigger lines roll, you're going to take a trade. Cool? All right. Now let's go forward with this. Again, if we have a line, like this is a pivot stop out, right? And you guys can already see the trade, can't you? I don't even have to point it out to you. There's a line that caused both triggers to roll over. There's a long trade. How far is it going to go? Who knows? Maybe it goes all the way up. Maybe it doesn't. But this one went 20 points. I don't know about you guys, but where I'm from, that's plenty of money on the NASDAQ. And now watch. After you take this trade, and I'm not saying there wasn't a second trade and then maybe you had to manage out or whatever. It didn't make it to the fib. Right? Now, can I talk about management real quick? Look, I'm going to make management really easy for you guys. Let's just look at something, okay? Let me just find a trend trade. So if you get into a trend trade, this is where a lot of people have a lot of trouble. So let's just say hypothetically you got into a trend trade. You're going to have to make a decision on whether you get out of your trade because of divergence. Everybody okay with this? I just want to make it really simple for you. If your small triggers are outside the large triggers, don't get out. Easy enough? If you're in a short trade, let's just say you're in a short, and there wasn't a fib here, but if you're in a short trade and your small triggers are inside the large triggers, get the hell out. That's your management. Easy enough? If it's a second or a third divergence, of course, you're going to really start to pay more attention. But more people jump out of a good trade because of a little divergence and then miss all the money. So again, I want you to pay attention when you're managing a trade. You basically get in and pray for it to go up until you have some type of divergence that has the triggers inside of, and then you have to start to weigh out where I'm at on the chart, how much could it pull back, and then, again, these are the divergences that end up coming down, going lower before they go back up again. So is everybody okay with that? Just a simple rule on your management. If your small triggers are still above your large triggers, don't get out. Just hang on for a minute and see what happens. All right, let's go through and let's do some more, okay? Because I think just looking at the charts is going to make it easy for you. So we didn't have any type of area or divergence up here, right? Nothing. It just dropped for no reason. There was something on the small chart, but it doesn't matter. I don't have synthetic fibs turned on. If you guys are interested in running a real simplified template, the generic dynamic Renko bar template doesn't have all the fibs from the other charts, so there's not a lot of lines to deal with. Perhaps as a new user, you may want to get rid of some of the lines and say, look, I just want to deal with a couple opportunities a day and keep it easy. And especially on the NASDAQ, this is really easy because it moves so much and there's so many opportunities. If you do it on the S&P or crude oil, you may not get as many trades, but on the NASDAQ, the generic dynamic Renko bar template is always a good one. So we're only going to deal with what's in front of our face. And again, we didn't come from a good top, and the question was asked earlier, can we still take a short trade? The answer is yes. I mean, obviously, if the triggers are going down and there's some type of trade set up, you still want to take your trade because the rules are still true. Now, once you start reaching areas, you may say to yourself, all right, I'm going to start watching this thing. But as long as the rules are true, shit, I think I crashed my Ninja Trader. That's a great presentation, isn't it? All right, hang on a second. We'll pull it back up. Bear with me 2 seconds. You're not the only one. Whenever you draw on your chart, I don't ever draw my Ninja Trader chart because it hates it. So bear with me here. I'll get it fired back up. All right. Always good to have a fast computer. Let me go back to where we were. And again, look, I just want to walk through the day. I don't know if you guys saw, when people posted in their pictures, and like me, this was the end of my day of $4,700 on a 5-lot. So it was a good day. I actually made a lot of mistakes, so it could have been a little bit higher, but I'm not talking about anything other than the large chart, because if you don't have the large chart right, you shouldn't be even looking at your small chart. Fair enough? So the answer is yes, without a good top. If your conditions are true, you can still take a trade. Okay? Now, preferably, if we get to some type of divergence. So in this case, look, we've got divergence. Can I review CL trades for today? We can go through the CL chart if you want. But I'm just more talking strategy here with you guys, not specific trades. But if you want, we'll go look at a crude oil chart. I don't care. We'll do the same thing on a crude chart, okay? So look. Divergence, where did it happen from? It happened from large triggers going up. That's a good situation, right? So if your triggers are crossed up, we're going to take long trades. And again, I'm more worried about the first trade after this happens. As you go further out, I'm not saying that there's not more trades, but if you get the first trade, you're going to make all the money that you need. The later it gets in the trend, it doesn't always finish. So I think it's really important for you guys, every chart, Sophia. I can pull up any chart on the planet and we can do this. Divergence, trigger lines are rolling up, long trades. And again, if you get the first trade, even if you make 10 or 20 points and then you waited for the next good top or bottom. So again, I wouldn't call this a good top in any way. And again, these are the ones that, could you get a trade in here? Sure. Did you get a trade? I don't know. But to me, this is a better top. Why? Divergence. We have divergence from an area. What's the area? The midband. So now that we have divergence from an area, I want you guys to go forward and tell me, where did both of my triggers roll over? Well, again, it didn't go real far. I took this short trade, if I'm not mistaken, today. But we had a short trade in here on the smaller charts, and it made it to the 1-to-1s. So now we look at the 1-to-1s. Tell me what happened. Everybody see the negative number divergence down here? So you can already see the trade, can't you? Divergence from some lines. Where do the triggers roll? Take your trade, grit your teeth, make a little bit of money. Everybody cool with that? If you don't understand what I'm talking about, divergence from some type of line, say so now. All I'm talking about is this little negative number from a line. Now, I want to go back in time on you guys. Bear with me 2 seconds. We started teaching this trade in 2003. Okay? I want you to understand something. 2003, 2004 trading plan. Our rules were get to a Fibonacci line of resistance, wait for divergence, and then when the trigger lines rolled over, go short or go long, either way. Now, this was the Russell 2000, I think, or no, it was the S&P maybe. But anyway, this is a long 20 years ago. So the same thing I'm telling you today is the exact same thing we said 20 years ago. Fibs, divergence, triggers roll, find a trade. Everybody give me a yes in the room. You got it. Now, this is old, but it's literally the exact same thing. hit a fib, get divergence, trigger lines roll, get a trade. Now, how far is it going to go? Who knows? I don't know. We don't know. Who knows? Nobody knows. Doesn't matter. If it keeps going, you can keep trading. But the trick is, where did it start from? Divergence from a mid-band, you get a trade short. Divergence from one-to-ones, you get a trade long, maybe a couple trades. Let's see where we went. Pretty damn close to a fib. All right, never really made it. No divergence. And then look, the mid-band holds. There's no divergence, so we're in an uptrend. So did we resume the uptrend? Could you have taken a long trade when all the triggers are going up in an uptrend? You could. Now, remember we talked about breaking fibs. Does it matter where it starts from? Yeah, it matters. Where did it start from in an uptrend? It started from the midband. So we had support. No, it doesn't matter which one it is. Is that your question? Is there one that's better than the other? No. There is not one that's better than the other. The one that makes all the triggers roll, especially if you have divergence, is the better one. It doesn't matter. So look, let's just go forward on the chart. Before I go any further, and before you guys see what's going to happen next, what do you see? Divergence from a fib, right? It looks very much like 2004 again, doesn't it? Divergence from a fib. So let's see what happened. Did our trigger lines both roll over? Saved us, didn't it? See that? They didn't both roll over. They didn't get strong. We didn't take a short trade. So, catastrophe avoided. All right, so we break through fibs. And again, look, this is the point. Remember we talked about every trigger breaking the lines? I mean, this is a pretty good look for all the triggers being above the fib. Would you guys imagine? You guys agree with that? So again, in a strong uptrending market, all the triggers are passed. You're probably going to do another trade, anticipating the market to keep going. So let's see what happens. So eventually, look, we kind of settle in. This is 10 o'clock. And we bump off a support, but the triggers aren't strong. We get divergence, but the triggers aren't strong down. We bump off support. Now we get a second lower divergence. Remember we talked about those. We like to see second lower divergences. It kind of tells us that, you know, as this thing starts ramping up, we're going to probably get a trade, assuming we can get down below here. Didn't really make it very well, did we? It was an uptrending morning for sure. Now, I actually did take a trade short here. Believe it or not, I got my ass kicked. I remember it. And then, fortunately, I had a momentum trade that got me the rest of it. Let's see if I can find a picture of what happened there. If you guys want to see what happened in the real world, let me see. I think I got that picture. By the way, guys, look, this is how many pictures I took today. I don't know how many pictures you guys take, but I try to take a picture of damn near everything I do, because the more pictures you take, the better it was. But bear with me. I'm going to try to find. I'm just trying to find that one specific one so you can see. Ah, dang it. Here, bear with me. I'll let you guys look with me at the same time. That's fine. Let's see what we got. Short. I'm just looking for that one trade. There's a lot of trades, but. Aha. This is it. All right, so here's that trade. This is the spot we were talking about. Remember I told you I went short. We had a high volume line there. It was all looking good, and it didn't work. And again, I recognize that we're in an uptrend and that we didn't come from resistance. So I took a momentum trade after the support held and rolled up. So I ended up losing, I don't know, looks like 6 points, 6 or 7 points, and then ended up making a lot of points. Anyway, support holds, you get the opportunity to go the other way. We won't get too far into that. But again, this is a situation where, you know, you're kind of compelled to take a short because you don't know what's going to happen next. And you're going to take losers. But look, that's a really good look for taking a short. It just didn't work. That's okay. Fortunately, it gave us a momentum trade to get the rest of it back to the upside. And then ultimately, you know, the market did its thing. Broke fibs. Remember, now you guys have a new criteria. If all 4 triggers are past a fib, God dang it to hell. I can't draw on my charts too much. Sorry about that. I'm going to try to draw on my NinjaTrader less. It's very sensitive if you draw on it too much. And that's why I always use Snagit for all my drawings, but I was trying to get away with it in here. All right, so now we're going to speed through, and then we'll look at some other charts if you guys want. I don't mind. So that was 10 o'clock. Now, remember what I said about really weak triggers and divergence. I'm going to try to draw them again. Where did I enter? Here's a picture of my trade. You can go look at it. I'll put it in the room for you. Not where would I enter, where did I enter? That's the difference. So for me, yeah, look, right there, long. So I went short, lost, and then I went long with a momentum trade. So you guys may not be familiar with momentum trading yet, but that's okay. But if you have a really good bottom and you have a lot of strong momentum, you can do momentum trades. I have rules for those, but they're in the user guide. Anyway, so yes. Remember we said if you have divergence with weak triggers and they get really strong, you can end up taking a short trade if you're so inclined. Now, support holds. Again, this is a good look for going long again. Would you guys agree? There's no divergence, but it's a good support, and the triggers roll over, and you're going to take a long trade. Usually when there's not divergence, sometimes they fail, and that's okay. You're going to end up making money and then managing out of your position. Now I want you to see the reverse. If you have divergence and you break the fibs, look what we end up with. Short trade. And again, there was a little bit of money to be made on that short trade. Now, what happened before the short trade? Divergence on the high got us to the fib. Second, lower divergence broke the fib, and that's what makes for the big trade. Does that make sense? And again, you get to a fib and you're waiting, and nothing happens. And then you get divergence and you're like, okay, with divergence, we're probably going to go back up to the midband. If there was a trade before you got there, it'd be cool to take it. If, you know, there's probably one right here. Now, when you don't necessarily break the midband all the way, they kind of reversed and you're like, okay, dang it. They just came down and took another peek, and then now what do we have? And again, this is very similar to what we saw the first time. Remember, divergence in the middle of nowhere, and now we have divergence from a line. Very important difference. Now when we have divergence from a line, it means we're looking for long trades. So I'll just give you the abridged version. Market went up a little bit. Now, when we get to the top, do we have divergence from lines? Yes. Did we get a trade set up before we hit support? Not really. So there's not much to do. right? It's pretty and it worked and it's a termination condition. And you're like, oh, what should I have done there? Nothing. There's no trade setup, right? If the triggers aren't spread out and you don't get a pullback, you don't get a trade. Now we get divergence again from 1-to-1s. The triggers are pretty much already down. Is there a trade? Probably not. Now we get a bounce from 1-to-1s and the triggers start to go up. And again, it's not divergence. So it's like, okay, we can take it, but you have to manage. And then ultimately we had divergence, broke a fib, and look, there was a short trade here. Now it didn't go very far because we ran into 1-to-1s with divergence. Well, divergence is just a negative number. You understand that, right? You have a negative number on the chart. That tells you that there's divergence. You okay with that, Tom? Just want to make sure. Now, there was no support lines. And when I say support lines, what I'm talking about is in the user guide, right? When we talk about termination conditions, we're talking about blue lines, red lines, dots, cyan divergence highs, magenta divergence lows, some type of line. So there's no line here. It's divergence, which is cool, but it's kind of all by itself. When you have divergence from a line, it makes it much more powerful. Really simple. And again, those are the ones we really like to see. Divergence and then breaking an area, or divergence from a line. It just means that they're more powerful. So divergence, 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 breaking fibs. Look, we don't know if this is going to go down. You know, this could easily go from here all the way down to here. Right? Yes. Divergence with support or resistance. Any support or resistance. So we don't know if this short is going all the way or not. There's no way to know that. It's impossible. But we know that we're going to take some money as we get to 1-to-1s. And if they stop, we're going to watch out because it could be a termination condition. Even the magenta ones. And if it is a termination condition and support with divergence, what are we going to do, guys? We're not going to do squat until what? You're going to go, damn, that's nice. Divergence from a line. Cool. But I'm not doing anything until when? The triggers say it's okay. So once both triggers are going up really strong, you see the long trade, right? And again, just like the short, we don't know how far it's going to go. We don't know if this short was going to go down 50 points or just 10. We don't know. I mean, we love them to go 50, but sometimes they don't. So if they hit something, you got to watch out. The nice thing about the market, especially the NASDAQ, is sometimes when you get, and again, is it a coincidence that you had divergence from 1-to-1s and after the pullback, you get this type of move? I'll leave that up to you guys to figure out as you guys go back and study your charts. And again, look, weak triggers with divergence, it's enough. If you get a trade set up, you could take a trade. Unless you're at support, and then maybe not. So, you know, if you get weak triggers with divergence and you get the perfect look for a trade, you're still going to take it. Everybody okay with that? Now, we get to support and there's no divergence. Now, it's not that support's not good. But, you know, again, could you have gone long? Sure. Is it the strongest trigger line look on the planet? No. So if you're waiting for a good bottom, this was your good bottom. Divergence. Triggers are above the fibs. Where did it pull back with both triggers rolling? It looks like this is the only spot right there. Can you guys make a living on this? If the market's moving, yes, you can make a living. So it's the idea of, you have to keep in mind of how all of this is beautiful and it bounced, but it's not necessarily where you should be risking your money. You want to say to yourself, I've got this reason and this reason and this reason and these triggers. That's what I'm going to commit my money to it. Now, the NASDAQ's easy because it gives you a new chance every 12 minutes, right? You don't have to wait around a long time for things to change. So, and again, look, we went up and we failed and we rolled back over to the downside. Can you take a short trade if everything's going down? Well, we have a termination condition with both of our triggers going down. So, again, it's a 1-to-1 that maybe you went long on, but then maybe you have to go short on the same 1-to-1. Is it better? Moves too fast? No. 34.5 should be the minimum large chart. 13, there's no such thing as best. Is blonde or brunette best? I mean, that's subjective. It's a chart. So I want you guys to think of something Fibonacci-wise. Okay? The 13.2 is 2 Fibonacci's removed from 34. Are you guys familiar with the Fibonacci numbers? So 13, 21, 34. So the 34.5 chart is 2 removed from the 13.2. So it's identical to if you have a smaller range market, if you have a 13.2 large chart, 2 Fibonacci's down is a 5.1. So it's exactly the same ratio as, you understand what I'm saying? So it's more about the ratio of the large chart being twice as big, 2 Fibonacci's removed from your smaller chart. There's no such thing as best. It's just this chart and this chart are very synergistic with one another. Just like a 13.251 is. You could go 89.8 and a 21.3 if you really wanted to and make it bigger. Anyway, for day trading, this works out really well because we want to see what? We want to see both triggers roll over strong, and then we get a trend trade and we get in, we get out. No. What did I just say? If 34 is your big chart, 2 Fibonacci numbers down, 13.2 would be the entry chart. I have a workspace made for it. So you can just use the workspace. All right, so let's go forward real quick. All right, so we have divergence from the middle of nowhere. Now, can you take one trade long? And then it doesn't go very far because you got a lot of stuff in the way, but could you take it? Yes, but you only use them when this agrees, if you use them at all. All right, so now what do we have, guys? Higher divergence. Remember what we said about this? 2 consecutive higher divergences, the market usually goes higher. Now, do you see anywhere where we had a pullback with strong triggers? Of course you do. You can see it. That one's kind of in the fibs. This one's past the fibs, and this one's way past fibs. All right. Now, same thing. I was asked the question, can we trade without a good top or bottom? You absolutely can. Look, divergence with weak triggers. If there was a little tail right here, you could go short. There wasn't, but you could until you get to the midband. And then remember what we talked about 50-50s? 50% of the triggers below the midband, 50% above the midband. Sometimes they keep going, sometimes they don't. And if they don't and they start going back the other way, you can get back on your long train again. Now, same thing in reverse. We have divergence with weak triggers. Maybe you guys don't use this or haven't been looking at it, but do you see it? small triggers inside with divergence, it's not going up anymore. So if you get a chance to go short, you can. And then this was going into the end of, let's see, that's 3 o'clock. We kind of went up and kept going up. So, all right, you guys want to do this with crude oil charts? Somebody wanted to look at a crude chart. So let me just build one for you real quick. Look, I don't even have to go and point. Look, here's the trick. You don't have to even look at your little chart until you get a condition on your big chart. You're ready to take a trade. Right? I could go look. It doesn't matter because, look, I could go back and look at the circles that we made on the charts. Right? And you'll see trend trade after trend trade after trend trade, but we saw them without looking at the little chart. So the only time you're looking for this, where, you know, some type of support is in between your triggers, is when your large chart says it's okay to do so. Otherwise, you don't stare at your smaller charts. That's something that gets a lot of people in trouble. All right, let me build a quick crude oil chart. We'll go through this real quick. So before I do this, and if anybody's going to leave, look, when we talk about trend trade rules, is the market coming from a good top or bottom? I want everybody to say, was there a line there? Was there divergence there? And are my trigger lines strong? And it's, you know, you can have a line and strong trigger lines, and that's good. Throw a divergence in for good measure, and it adds a lot of power to it. Everybody okay with that? Now, you have to then have strong triggers on your large chart, which if you have them on your large chart, they're going to be strong on your small chart. So it's kind of redundant. Make sure you didn't trade into the wrong areas and then get in at the right spot. So hopefully this helps you guys. Just a little bit of thought on the large chart first. Where are we coming from before I start going off, clicking the dang button and doing too many trades? All right, what do you want to see? Crude oil, 13.2 chart. I'll put the generic one on it first. Generic dynamic Renko bar. Oh, I'm not connected to data. Hang on. My program was using my other connection here, so bear with me a second. Okay, crude oil. You ready? And again, look, this was overnight. So we'll start at midnight, okay? You with me? Midnight, what do you see? Divergence from nowhere, and now we have divergence from a line. Everybody agree? What happened next? Well, is there a short trade that you could have taken where both triggers are strong and you get a pullback? I'll draw a circle. Would everybody agree or disagree? Cool? All right. Now, let's go forward. So we hit one-to-ones. There's no divergence. Didn't follow through. Not a lot happened. Now we get to the morning. You know, and again, this happens a lot when there's no divergence and, you know, it's not really great. It's not that you can't go long here. You can. But these are the ones that, you know, you don't know what happened on the small chart. I would guess that there was a trade to be taken here on the smaller chart. So you might have got one here if you're doing momentum trades, and you might have got one here if you're doing trend trades. You can't see what happened in here. It could have been, you know, $150 and then a second divergence that got you out. You don't know what happened. So it's impossible to know on the big chart. As we go forward, you know, again, you can see significant breakout of all the fibs. Yes. So can you do another short trade? Yes, I think you can. I would say yes with that look. You're compelled to go short. If you break all the fibs, can you go short again? Well, Unless something stops it, the answer is yes. So there's probably a couple more opportunities for some trend trade shorts on the smaller chart. And then we get to a fib and we have to say to ourselves, hey, what happened? This is a very classic, super classic 50-50. So look, divergence. What line did the divergence come from? Do we have one? No. Nothing. So when we say 50-50, this is classic. Look, half the triggers are above all those blue lines. Half the triggers are way freaking below the blue lines. Probably not going long here. If you did, you probably didn't do real well. All right, so now trend resumes to the downside. And, look, we would like to be perfect, but it missed it by 2 ticks. A lot of times they come back and get that one, but we'll see what happens. All right, so this is probably the first place you're getting itchy for a long trade. Divergence from a fib, from a pivot stop out, everything's going up. You hit the mid band, but you're like, it's got to go up. Right? I would guess probably looking for a long trade in there right there. And whether you lost or managed it or whatever, it doesn't really matter, but that would be a good look, I would imagine. And they said, no, we're going down. So we get it, again, you get totally below fibs. Are you going to be able to go short one more time with a downtrend? Probably so. And then look what happened. Remember what I said about small triggers being inside the large and divergence? You have to really pay attention to that because sometimes that's enough to ruin the day on a downtrend. All right. And another 50-50. But, again, look, divergence from weak triggers. If we get going enough, you can take a long trade. We get totally above the fibs and the fibs hold. That's pretty common. Not easy trend trading is what it looks like to me, but, with divergence on the low and a breakout, that's a pretty good idea that we're going to keep going. Now watch this. Divergence. What area is it from? Do we have fibs? We don't even have weak triggers. I mean, it's literally just divergence from nowhere. And it's like, pfft. So they let it have it, didn't they? Still divergence. But until we started really trucking, this is probably one short trade that you took. If you were in the market, I'm assuming you went short at 11 o'clock. I guess there was news. The patterns are still the same. And then look, all the triggers are screaming past the fibs. Is it a good trade? I don't know. You tell me. How much money do you want to make in a day? Just ballpark number. Give me a number. How much money you want to make in a day? $1,000? Okay. So if you went short right there, let's look at the price. We'll call it 57. And you got out at 37. If you sold 4 contracts right there and you got out right there, you made $1,000. Is it a good trade? You tell me. Good in my book. And then if you're really on it and you say, hey, it's so strong, it's probably going to break, I might hold it a little longer. Or how about this one? Let's wait for it to break and take another one. Crazy talk. So if you sold a 4 lot here and made $1,000, and then you broke through and you sold a 4 lot and made another $1,000, would that be good? I would say that's good. I don't give a rat's ass where it's going. I don't care if it goes up. I don't care if it goes down. I want to know, where did it come from? What's the look now, and what's going to happen next? That's all I care about. Now, if you had the wherewithal to hang on for dear life until it got to a fib with a 4 lot, you made $4,000. Anyway. Now, let's go forward on crude. Fibs hold. Do we have any divergence or anything? Not really. I'm a fan of divergence. When you say this is not what I'm sure about, be more specific. What aren't you sure of? What are you not sure of? I'll fix it for you. Just tell me what it is you're unsure of. We follow the rules and look for a trade on the 5-1. Yes. If the large chart says take one. Is that the part you're missing? If the large chart says look for a trade, then you look for a trade. You have to quit having too much of an opinion on what's going to happen here. Just know that when you get there, you should take some of your money off and then maybe manage it. You understand what I'm saying? You don't know what's going to happen, but you should maybe take your money. And then if it breaks, you can do it again. And you don't know what's going to happen. But, every once in a while, we get the good one. Not sure how you would have entered. What do you mean? I mean, it's the same. Here, let's look at it. Every short trade has the same look. It's never any different. Look, some type of fib area in between the large triggers. It doesn't matter what the area is. If it's some area between the large triggers, you're getting in. Yes, Tanver? So it doesn't really matter as long as you have an area in between the triggers. That's it. So when you're saying, I'm not sure how you would have entered, you just put a limit order, right click on the chart, put a limit order at the spot, and hope for the best. On that trade, there was no divergence, but we would exit because the small triggers went inside. No. What is your exit criteria? Most of you are going to get out after $100 and $200 because you're like, thank God I made $100. So the next step is, what are your rules for getting out? I mean, if it's, if you hit a line and you say, hey, I'm going to just get in and get out at the line, that's easy. Yeah. If you're going to say, I'm going to wait for a condition, so watch. I don't have a freaking, here. I don't have a smaller chart. I'll make one real quick. I don't know what happened there, so I wasn't watching Crude. Bear with me. But I have a box and a circle there, so we'll find out. Yeah, it was Crude, but the patterns are the same regardless of the speed of the market. All right, so here's the question. So assuming that it wasn't news and you were going to take a trade, you put a limit order in at a spot. Can you sell the mid band and 1-to-1s just below your triggers? Oops, I didn't mean to do that. Bear with me. Where the hell did that go? All right, so here is the other one that we were saying go along with. Look. Mid band, 1-to-1s. You go long. Now, here was your short. First one was at the mid band. and then we broke through the fibs. Remember, we talked about it. So I drew, I want you to see it side by side. Everybody okay with this? Look, this is side by side right here, same one. So it's going down, and you're going to sell resistance, mid bands, inside the triggers. Now, what's your exit criteria? I mean, if it was me, for sure, I'd have a target right here. Wouldn't you? I mean, give me that much money, I'm freaking happy. I mean, that's 25 ticks, $500, $1,000. I'm trading a 5 lot, so it'd be $1,250. Now, if you said, I'm just going to wait until there's a divergence or some reason to get out or hit the fib, then this would have been your exit down here. I just need an up bar. Something. So could you have made that? Sure. Would you have made that much? Probably not. Most of everybody's happy to take 25 ticks and get the hell out, but that's fine. I'm going to put them on mute. All right. So again, look, same thing. You guys can go through and do this on your charts all day long. But again, did I have divergence? Was there a fib? Yes, there was, but it just went straight up to a mid band. So that held. And then, again, you're going to start saying to yourself, if I have divergence and the triggers are rolling up, do I take one trade and then manage it tight? If I have divergence, can I go long? Well, not when the triggers didn't roll over, so I don't see any good trades. Now, what about divergence from a midband? If the triggers rolled down, maybe you could take a short. They're kind of inverted there, but... So divergence from a midband, I would be more inclined to go short here. Maybe here with a quick watch on it since I'm getting close. So, going back, just looking at crude right off the bat, I see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And then obviously we have divergence that breaks a fib, but I don't see any good spots for a trade in here. You want your trade to be right in here. Divergence, break a fib. You want your trade to be right there. So maybe 13 or 14 opportunities on crude oil if you're on top of your game and you were up at freaking 3 in the morning. Define best. They're all the same. They're just bigger or smaller. There's no such thing as better or worse. You can swing trade. Look, here's the best thing, okay? Of course, people are trying to get in now. It's a little late. You have to first define what are you trying to do, right? So, like for me, I want to make $4,000 a day on one account, 5 contracts. So $800. That's my goal, $800 a day. If I can trade the NASDAQ and do it in an hour, I'm happy with that. If I trade the S&P, it might take 9 hours of watching the chart to do it. If you trade a large chart where, here, let me give you the answer to your question. Hang on. Bear with me. So let's say you take our rules and you're looking at crypto. So this is a 240-minute chart. So I was lucky and got long down here, but let's take a look at the same logic on a 240-minute chart. So would you guys agree down here at the bottom we had divergence and then we had fibs? I think we can agree. So after divergence from fibs, where do we start seeing support? So pivot stop out at the triggers, and then obviously it just took off like a bat out of hell. But so you can trade a 4-hour chart. Your low was made on the 15th, and you might have got long on the 20th, and you'd still probably be long. Or if you were going short, you can if you want. I can do anything you want. It doesn't matter. I mean, that's just I have a daily chart and a 4-hour chart. But let's just say I wanted to use a Renko, and let's go 89.8. Okay? Just for fun. Because I know it did get more volatile today. So I'll put a generic dynamic Renko bar on here. You guys are testing me to see if I'm good or not. Whew. Freaking crazy. Okay, it was crazy in there today. I mean, this is obviously a very fast chart with today's volatility. But, again, look, same thought process. We could use the same logic that we were just talking about, and you could go pick off any spot on the chart that would, let's say you were day trading Ethereum, which maybe you won't, but divergence from a fib. Do you see where the two triggers roll? Could you go short crypto and make $3? I mean, that's a very fast chart. But the patterns are the same. So, we get a higher pivot with divergence. Both triggers roll. Could you go long? Sure. The fibs break and you get a pullback. Can you go long? Sure. So you can use, you'd have to tweak your chart size to whatever you want it to be. But like I said, there's no right or wrong. It's just patterns. So you're looking for the same pattern over and over and over again. It's fibs hold, triggers roll, go short. Fibs hold with divergence. It's probably going to be a better low. Fibs hold with divergence and the triggers roll. It's going to be a better top. So that's all you're looking for. Some markets move more than others, but they all move the same. They all move up or down. And it's just a matter of you guys making sure that before you start going long or short, whatever market you get, you've got a really good look at the top and you've got good triggers to take your trade on your small chart. And then look, now that you know that if you have a pretty good top, hang on for a little bit, make a couple $100 on your trade. Do it 3 or 4 times a day. You'll be really happy. All right, guys, that's all I got. I just wanted to really get you guys a good head start. It takes time because you can go back. What I want you guys to do, set your charts back, set up a generic dynamic Renko bar template. Set your chart back for 30 days and go back and find 100 trades. Go back and find 100 good tops and 100 good bottoms and start getting familiar with that look, because you're going to be a hell of a lot more confident putting those trend trades on after a good top or bottom. I promise you. You just have to teach yourself how to focus in and find that spot and be patient for it. Not that you can't take a trade in another, if you have a good look, you can still take trades on other charts. That's not what I'm saying. You can still take a trade if it's not a good top or bottom. You just may have to manage that trade a little more assertively. That's the only difference. Do I have a momentum checklist? Yeah. Check it out. All right. Let me go to, this is the user guide. Momentum. You ready? So look, the momentum trade and the HVA trade are identical. You have to have a good top good top. Make sure you don't trade into a termination, and then you buy or sell a pullback to the high volume line. So the checklist is the same. It's good top, and then at least your small triggers are rolling. Hang on, let me bear with me here. Find a picture. So HVA trades are really the same as momentum trades. You're just using the HVA line, but you want this same set of rules, meaning you have a good top, but you don't want the triggers past the top, or you want a good bottom, so that the high volume area trade is the same as a momentum trade. A momentum trade pretty much, there's the high volume on this one, but this is the look. A good bottom, strong small trigger lines, and that's really the tricks, strong small trigger lines. And I did one of those today, if you guys remember. We were talking about this one. So, look, you see how the trigger lines were really strong right there? And because they had broke through the 1-to-1 and we had a really good bottom, there's a lot of reasons for a good bottom. That's the reason I did the momentum trade. Now, not that I was mad about losing my short. I did my short and it didn't go, and I'm cool with that. So, but a lot of times when you get, an uptrend and you barely break support for the 50-50, you get that momentum trade going the other way. But momentum trades have to have good tops and good bottoms. That's the trick. It doesn't really matter, and let me find my normal, bear with me here. You guys have all seen this picture, I'm sure, a bunch, right? It's always the same thing. You have to have a good top. Some of your triggers have to roll, and then you can buy or sell a pullback to an area or a high volume line with momentum. And then when all the triggers roll, you're doing a trend trade. So it's pretty much the same thing on both sides. You don't always get a momentum look that's worthwhile, right? You don't always get a high volume area that's worthwhile. But if you get the good bottom, and now that you can recognize a good bottom quicker, you'll see when those small triggers roll on your 13.2 on the S&P or Crude, you get that first momentum trade. And that's really the trade that we were teaching, if you remember, this trade from 2004. This is a momentum trade. We'd classify it, I guess, as momentum because we had a good top because of fibs and divergence, and then momentum with the small triggers. That's all it takes. It's worked for a long, long, long time. The trick is making sure you got the right top or bottom. That's the trick. And they still don't always work, but most of the time they work pretty good. The other one, just for grins and giggles, in 2004, we also had a momentum trade through the 1-to-1s. The 1-to-1s were white then, they weren't yellow. But if you had strong triggers and broke your 1-to-1s, that was the momentum trade. And it's just funny because today that's the trade I took too. Trade number 7 from 2004. Anyway, the trick to this trade was this bottom. Without this bottom, you can't do this trade. Hopefully that makes sense. All right, guys, I'm going to stop the video. I'll save it off. You guys can watch it if you want. Hopefully you've picked up something that's helpful. If you need me, look, I'm in Discord all day, every freaking day. So you guys are more than welcome to message in the traders chat. Right? I post so many freaking pictures, and people post pictures in here all day, every day. But again, hopefully you guys have, again, we were talking about this same concept in here a little bit earlier. I posted a lot of pictures, but divergence with strong triggers, divergence at 1-to-1. So, the things I'm saying to you guys, we saying in the rooms all day long. And look, people are posting their trades. If you guys don't participate in the Discord, you're cutting yourself short out of like 90% of the love that you could be getting. So ask questions in there. Let us know if we can help you. Be more than happy to help. And otherwise, we'll see you guys bright and early in the morning. I appreciate you guys being here.